Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So it's been a while, I've been super busy. Crypto's been going bonkers. Let's take a look. I'm going to separate this out into a few videos because I know they're going to be long. I'll talk about Bitcoin first. Most importantly is this trading volume, which is just absolutely beautiful. We can thank things like Coinbase, number one, first and foremost. On-ramps are crucial for new money getting into this. They can't send it many other places if you're in the United States, if you're a US citizen. So kudos to Coinbase for being there since the beginning. You know, they've gone through both supporting and not supporting SegWit, whatever. All that matters right now is that people who are just hearing about Bitcoin can actually get it. So just a quick aside, back in 2014, 2013, when that bubble was happening, there wasn't much on-ramping as there is now as far as consistency. Coinbase was there. There was some lag time. There'll be some lag time with this bubble as well because it takes 2 to 5 business days to get verified. So I remember then, you know, I bought some at 500 and then by the time I was verified, the price was already at 900. So there's that. So expect a little lag time. That'll push this even further. But love them or hate them, Coinbase, huge reason why we're here today, for sure. There's honestly so much to talk about. I don't even know where to begin. But Saturday, Sunday I was in New York, talked to some great crypto people. Everyone's super nice. Like, it's amazing how just nice people are in this space. I had some really great networking, things like that. On Monday we get this SegWit Agreement from the unlimited people, which is basically just smoke and mirrors, and you can not take my word for it, but you can read about it in the ShaolinFry post on the Bitcoin dev mailing list. I'll post that in the links below. I put out a pretty okay article on Bitcoin Magazine on Monday talking about a lot of stuff. Mainly it's really hard to determine what targets are going to be right now because we're just going to have to wait till the new money gets in. Demand right now is super high. Mainstream media visibility and articles are pushed out every day talking about everything imaginable from ICOs to just the price to new companies looking to get into blockchain, new companies looking to get into Bitcoin trading and exchanges and brokerages and blah, blah, blah. We've got exchanges around the world trading at huge premiums right now, like 2,400 in Korea, 2,350 in India, just like absolute insane demand everywhere, which is what we always wanted. Some of us didn't expect it to happen so soon. And then lastly, let me just talk about GDAX, which is the exchange side of Coinbase. So if you want to take a look at what I've been up to as far as sells are concerned, I've been selling a little bit all the way up. You can pause the video, look at all this stuff if you want. GDAX, again, crucial to this existence. GDAX earlier on just was a joke. No liquidity, huge spreads. You can see that's completely changed. Spread now between 20 cents and a penny. Fees on limit orders are $0. There's a fee on market orders. I don't remember what the percentage is. You can look it up. Point is, if you're looking to get in and out, this is the place to be as a US citizen. You can transfer your Coinbase coins to GDAX for free instantly, and then you can put a limit order in that you avoid all fees that way. Because if you sell on Coinbase to your bank account, there's a fee there. I got wires from GDAX to my bank account in less than a business day, which is insane. Again, another huge part of this is just everything working and everything running on all cylinders. The fact that they haven't gone down is a kind of a miracle considering where they've been. And then just to get back to the selling, for me, you know, I DCA'd in all the way down and I'm going to DCA out all the way up. So this might look silly, but that's just a way of saving myself from myself and paying myself. I've got like 80,000 in loans to pay off still, so I'm working on that nice and steady. So like I was saying earlier, prices around the world are ballooning. This is just the last 24 hours off of Brave New Coins breakdown here. A few things pop out at me. Number one being USD total volume comparative to the rest of the world, carrying much weight here. JPY, which had been leading, based on this website anyway, and their metrics, is down significantly. Second thing popping out at me is the Korea volume, South Korea, which is not volume necessarily, but price, which is at 33.70. And if we scroll down here, pretty much everything's between 24 and 2900. I don't know what CLP is. Let's take a look real quick. So CLP is the Chilean peso. Just learned that out. And anytime you see just like crazy prices above the highest volume market, I just assume that the supply demand is out of whack. There's a bottleneck as far as the order book, people, on-ramping, off-ramping, whatever. There's some sort of bottleneck happening there. Just demand is exploding in Korea, for instance. I'm assuming we need to be able to sort this by price. I can't do that right now. So I'm mainly going to focus on the USD exchanges, and you can see, surprisingly, Finex volume there is leading GDAX, which you'd expect to have the highest volume based on their price, which is now higher than Bitfinex by $60. And based on the fact that you can just on-ramp there and buy instantly, pretty surprising Stamp is above GDAX even. I suspect that's due to order book being thin on the ask side. So if we separate that further, so on here I have Coinbase, Bitstamp. This is gold down here. Funny. I'll just take that off because it's irrelevant. Coinbase, Bitstamp, Bitfinex, and the two futures exchanges. So if we just look at futures exchanges and Finex for a minute, the big thing happening in China is the regulatory issues with PBOC and getting in and off an exchange. Again, there's a bottleneck there. Anytime you see a bottleneck, you just have to assume supply demand is out of whack. It's going to affect where it is relative to spot. You'd expect a negative premium if you can't get in or out of an exchange. There's no supply demand is going to be altered there. So if we look at this, as soon as the PBOC stuff happened, so yellow is that's Finex, and then these are the futures exchanges, purple and yellow. As soon as the PBOC stuff happened, futures has generally just been behind spot. Finex has been above. Again, they've even been out of whack because of the AML issues, KYC AML with Taiwan. So none of this is as pure as it should be, which is really why I like looking at Coinbase right now as far as the most purest form of the market, even though demand is spiked way out of whack there. So we just focus on this period where quarterlies, which should be above weeklies, was equal to weeklies and even below at some point here. Now, when you get a flipping of that, that's a big sign that we go from just oversold, way oversold, to resuming whatever we were doing, in this case, bull trend. And then we continue, then we start breaking Finex even, and then we finally get an actual premium on futures, which continues, which tells me this is real, this is going to keep going. Now the thing to watch for is the premium between futures and spot. And if we go to add Coinbase to this, in red here, you can see there's about $120, $30, $40, $50, $150 premium between quarterlies and Coinbase, which is definitely on the higher side. But overall, that's what you expect things to be due to contango, backwardation. You can look that up. Just general future market principles. You expect the contract expiring later to be highest in the premium, even though the futures at OKCoin aren't exactly normal futures because your position isn't locked for 3 months. It closes every week. It settles every week, rather, and then finally closes in a month, but it locks in whatever you have at the time. All right, so that's enough about futures. If we just focus on Stamp, Coinbase, and Bitfinex, Bitfinex in blue, Coinbase in red, Stamp in green, you can see generally Stamp has been lagging this entire time until very recently, as in within a few hours ago. Stamp has shot up, reasons that I'm not aware of, likely just order book. I don't expect demand to be higher there. They did announce LTC and margin trading and Ethereum coming soon, whatever. I don't think they're much force to be reckoned with overall. Their volume has just been down ever since they got hacked a few months ago at this point. What's also interesting is Finex has begun to drop below Coinbase. Again, that tells me two things. Coinbase demand is just insane due to on-ramping, and there's some evidence that the the cash on Bitfinex is drying up. So there's three things to support that theory. One being that they're cold wallet since the announcement of the Taiwan AML issues with USD halting withdrawals and deposits. Since then, their cold wallet has just gone down. It's had a bit of a recovery recently. But basically, if you want USD on Bitfinex right now, you have to transfer another currency and then sell that currency to get the USD. Okay, so that's part one. Part two is margin funding. This is BFX data. Swap stats has consistently been just in an uptrend since the AML issues. I don't know much about historic or lending swap rates, etc. So someone can comment on this, but this is historic. Yeah, so it's just in this upward trend of higher and higher fees on margin funding, which tells me that there are more and more people trying to borrow USD to buy Bitcoin and less USD being available. So again, there's a supply-demand issue here that's out of whack. There's money to be made, certainly, if you trust in Bitfinex that you'll get that money, and or you don't care about losing that money forever, because you can always send it to Bitfinex and just bank on margin fees. That was the part 2 of 3. This is the third part. Tether is above $1, which in normal conditions, Tether should be 1-to-1 with Bitcoin, with the USD. When Bitfinex was at a premium, Tether was below $1. Bitfinex is now at a negative, when it was at a positive premium rather, it was below $1. Bitfinex is now at a negative premium. It's above $1. There's more need for Tether, so Tether goes up. Tether's just a USD, I'm going to call it a derivative. I don't know if that's the right word, but that's the trifecta of there's not a lot of USD on Bitfinex right now. So all of that plus the price lagging Coinbase Bitstamp tells me that there's some definite issues with USD, which isn't necessarily new information, but all these metrics are something you can look at going forward to determine how in trouble they are with USD. So I'm actually going to start on low time frames first because they're more relevant than high time frames, which have almost zero legitimacy for entries and exits. There's some support that you can look at there, but overall everything on high time frames isn't going to help you much because it's just going to tell you we're either overbought or we're exponentially in parabolic land. So this is 15-minute Coinbase, turning off even cloud for a second. You can see we've just ridden the 50 ever since the cross. We've touched the 200 a few times, this definitely being an outlier. But overall, just a beautiful trend here. Something to certainly watch and to look at is the decrease in momentum we've had here. Just a growing bear div on lower time frames. How and when that's going to be relevant, I don't know, but you can say that it's there and you saw it. And there's some evidence that we're weakening here. Volume is okay. You can see, again, we're getting higher highs on lower volume. But generally speaking, relatively to where we've been, volume's fine on Coinbase. If we turn on a few things, I went long on one broker last night on the dip, basically because it looked like there was some sort of cup and handle situation going on here. And I just bought the dip in general. So what I'm saying here is there was a throwback. This is just basic market structure, chart patterns. The measured move was just the depth roughly of this pullback cup. We had a handle that didn't break the 50% of the entire move. And there was a W within the handle. All this is just telling me up, up, up. Then we had this throwback. We had a couple throwbacks just to confirm support. And I eventually got out when the fractal on the 15-minute printed bearish fractal. I didn't end up getting back in on leverage, but the point is that was a fine 20+% trade. I don't know what it was. The target remains this 1618 level, 2500. Should we push through this? There's been some interesting asks if you've been watching the order book in the 500 coin range, just flashing on and off. We can certainly just keep going. You know, demand again, I keep going back to this, but demand's just insane right now on Coinbase. There was even some message where they're having trouble verifying the CVN, which I think is the 3-digit number on the back of the credit card for some people. So that just tells me there are tons of people just trying to buy as quickly as possible. And there's, again, bottlenecking there with verification issues, which is just going to fuel this even further the slower this goes. If we go to the hourly, again, just beautiful entries with cloud here, barring this, which is a bit of an anomaly. But long entry here, all signals say go. This is your Kijun bounce. Again, anomaly here. This was the exit signal for this entry. This was the entry signal here at 2250, 60, something like that. And it's just been nothing but up since then. Bit of a TK disequilibrium on lower time frames. Getting a div in volume. You're getting just a growing bear div again, like I've mentioned. So there's certainly weakening based on low time frame metrics, but overall it looks fine. If we go to 4 hour, again, you can see just a div here, a bit of a hidden bull div on that drop. If you draw it from the candle bodies and not the wicks, which is what you should be doing, you can see you got a higher low and a lower low in RSI. So that was another high time frame sign. Again, your entry here was during the TK cross recross situation, 1700 on the 4 hour. Still no signs of exiting. We go to the daily. We begin to look at just parabolic type situation. The cloud here is a little bit messed up because of this giant wick. Overall, everything looks fine, just for more up. If we take a look at that pitchfork that most of us at this point have been watching for a few months, you can see that we're way out of the upper bounds of that. Again, I was saying these are signs for parabolic hastening of trend, things like that. And because we're outside of the normal rate here, normal rate would be just bouncing around this. We're way above that at this point. So now we have to sort of redraw the pitchfork just for current rate conditions. One reason to do this would be to just look for targets again, because everybody's wondering and asking me about targets anyway. So that's one way to do it. That's one pitchfork. Again, you can see we're bouncing on the top of that one as we talk here. Another way to draw this would be here. So this would be the May 4th low and May 11th and 12th high low. You can see it matches this pretty perfectly as far as a bounce is concerned. All these are bounces as well. So again, when you draw the pitchfork, it's not necessarily curve fitting, but you want to make sure it makes sense with the price. Resistance here, consolidation and resistance here, resistance, support, resistance, blah, blah, blah. All this looks good. So the next target up 25 to 2600, something like that. Pullback targets being 22 to 2350. If I add fibs to this, again, another way to measure targets to a similar high-low, we get this picture, 2529, 2800, so 1618, just of this most recent high-low. And that you can use the pitchfork to like determine the time exactly. That's the better thing about diagonals. They help you see a time component versus just horizontal. And why is that important? Because you're just looking at rate with pitchforks as well. Another way to look at rate would be to fib out the previous drives and consolidation periods. I talked about this in another article at Bitcoin Magazine, but we've essentially hit either the 2 or, so if I just fib here to here, we've hit the 2, which isn't really a fib, but double that price, and then on from here to here, this consolidation up target, we've hit, again, the 2 number, and then from here, this high to this low, we're just past that point already. Again, that says this rate is just higher than it has been previously. And the last thing I'll mention about targets is yearly pivots, which have been pretty consistent as far as pit stops, support resistance levels. Just looking at it, R1 resistance support around that area, R2 not so relevant, R3 resistance support around that area, R4 definite pullback almost exactly at that area. So the next one up, 2670, something like that on Coinbase. That's a definite halt point, pit stop that I pretty much expect us to hit going at this rate. But overall, the target, who knows what it's going to be. 4 to 10K, certainly possible with this demand. The bigger this gets, the more people are going to be interested. The bigger the market cap gets, the bigger the institutional interest is going to be, just because they can move more money around quicker. Something else to pay attention to, transaction fees and confirmation times, hash rate. I'll talk about that in a Bitcoin Brave New Coin article that'll come out either tomorrow or Friday. So look for that. That's all I have up for Bitcoin. Pretty amazing run we've had. Hit me up on Twitter, Telegram, TradingView. Like, dislike, comment, share, and subscribe on the video. And happy trading.